Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. Thanks so much for joining me in today's video about this current Bitcoin rally. Is it potentially over? What's going on? Is a pullback looming large? Subscribe to the channel for more videos like this in the future, and of course, join the Rekt Capital newsletter for more level-headed, unbiased analysis on Bitcoin and cryptocurrencies. Let's dive right in to the video. So Bitcoin's price action, ever since it's bottomed in the 20k region, it's been ascending for what has been a pretty uninterrupted uptrend. Aside from the unremarkable September that we've had, ever since then reversing into a higher low and then enjoying a nice rally for 3 weeks at a time, essentially from 4,800 to 57,800. That's quite a substantial amount of price increase for Bitcoin. That's in fact around $15,000 to $17,000 increase in Bitcoin's price action, depending on whether you're looking at the wicks or not. So a phenomenal rally. That's something that has to be said about it. But we are revisiting a resistance area that has rejected Bitcoin's price action on 1 occasion, 2 occasions, 3 occasions, and quite sharply on that 4th occasion. So now that we're approaching this for the 5th time, should we be thinking about a potential rejection from here? Because of course it would be phenomenal, it would be fantastic emphasis on the bull side momentum if we were just to break beyond here and actually weekly candle close above this red area, because that's something Bitcoin was never able to do. Weekly candle close above the red area right over here. Doing that would probably pose immense pressure on the sellers, however many sellers might be still residing just above this red area. So a weekly candle close would be phenomenal. But we're not close to that weekly candle close just yet. Of course, it is Tuesday. We could still push up here into this red area, closer into the 60s, low 60s. But we also have to ask ourselves, is a rejection looming large from a major supply area that has been rejecting price for Bitcoin in the past on multiple occasions? Once we do get that rejection, it would come as no surprise. But by the same token, what we should be looking at, should that rejection take place, is we should be looking at a weakening of that supply area. Are the sellers weakening here? Are they able to push price to deep levels of discounted prices for Bitcoin upon a rejection? Because right over here, this recent rejection was 25%. And it would be interesting to see whether we see a 20% or a 15% rejection from here, for instance. And if we do, that could be an interesting development showcasing a weakening in this region of resistance. And that's what we want to find out about, because there's no reason to think that Bitcoin's going to continue in a vertical uptrend with no pauses in between. Of course, Bitcoin can do that, as it's showcased earlier this year. But at the same time, we need to understand that such price action like this, pulling back and then pulling back again, that's healthy price action which enables the next uninterrupted uptrend. So for us to be able to breach convincingly beyond this resistance, we might have to reject from it first, enjoy a bit of a pullback, maybe to the low 50s, high 40s, but only insofar to establish some buy-side support here and showcase weakening in the sell-side pressure at around these regions right over here. That's what we want to find out, because we need to see if this is a weakening resistance. And not wanting to find out about a potential rejection looming large isn't how we should be approaching things. We should be wanting to see what this rejection could actually tell us about a major resistance area. Is it weakening? Is it strengthening? Should we be scared of it? And should we actually ignore it, really? Because if you're thinking about this on the macro perspective, months from now, this isn't a big deal. This resistance is probably going to get breached. It's probably going to see Bitcoin reach new all-time highs. So on the monthly scale, going forward, there's no need to be alarmed about this resistance. But in the short term, this may be a resistance that matters. We could see some short-term volatility, like I mentioned, for a pullback, a healthy one. But in the long run, this resistance doesn't matter. In the short run, it may matter. That's my point here. And of course, if we look at this entire stretch where Bitcoin was able to revisit the green area and bottom out in this 28K region, we've been able to rebound from a major demand area, just like I mentioned in mid-July. And now we're reaching the converse of that situation, a major supply area. So we could see some sort of rejection, even if it's a little one. But having said that, we also have to take into account that investors are extremely greedy towards Bitcoin. It is at the 78 region, so the Fear and Greed Index is showcasing 78. And the last time we saw 78 or 79 was in early September. And let's go back to early September, where around this period we saw a bit of a pullback in Bitcoin's price action. In fact, we saw a 25% retrace once we saw those greed levels reach the same levels that we're seeing right now, 79 in early September, and we saw a 25% retrace on the back of that. So is it reasonable to assume that 79 Fear and Greed Index could give us a 25% retrace? It could give us a retrace of some sort, but 25%? If this resistance is weakening, then we're going to see much less than that. And if we do see much less than that, then that's a really good case to make for new all-time highs in the next few weeks or even months. But of course, at the same time, the last time we saw 79 on the Fear and Greed Index, we saw a 25% pullback, but we also have to mention that we've seen high Fear and Greed Index levels before. And we've seen that since around December 2020, Bitcoin was able to maintain its extremely greedy territory for months at a time until that May crash. So, of course, Bitcoin can ascend into extremely greedy territory and maintain the highs and even go to new highs while still being in an extremely greedy territory. But this will only happen once we break to new all-time highs. We haven't yet done that. So I think this Fear and Greed Index is quite useful, seeing as we're still in the sandbox of 65K to 30K. And once we breach those new all-time highs, then we're going to be able to have investors be greedy for extended periods of time, just like we saw right over here in this Q1 and late Q4 for Bitcoin. So in any case, really important to just take a look at the analysis, the data. Investors are extremely greedy. And by the same token, they were extremely fearful at around this time. If they're extremely greedy right now, still we could see a bit more upside. But we need to see and be at least cautious and cognizant of the fact that we're just below a major region of resistance, and a rejection coming here wouldn't be out of the ordinary. But what we need to answer, or at least ask ourselves, is if a rejection is going to happen, which is quite likely, what is that rejection going to tell us? Is the resistance weakening or is it strengthening? And my guess would be that should a rejection take place here, that resistance would give us a reaction that would showcase to us that indeed this resistance is weakening and Bitcoin will be able to ascend and break to new all-time highs in the coming months. In any case, guys, that's about it for today's video. Thank you so much for watching. Subscribe to the channel for more videos like this in the future. And of course, like the video if you'd like to see more market analysis like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.